Welcome all to the Node, your place for news, interviews, and DeFi and crypto education. I am Mike, aka Veteran Crypto, and with me here soon, as always, will be David. We're doing a little bit different format. Not going to do the socials at the beginning. It kind of bugs me taking 20 minutes going through that at the beginning of the show. So we're going to start doing that at the end. So I'm just going to jump straight into the news. And when David gets here, we'll start discussing the news and what's going on, and crypto, DeFi, TradFi, the macro markets, and then we'll do, of course, the deep dives. And then at the end of the show, I'll show you all where you can find find our content, find our website, all that sort of stuff. So good morning to everybody in the chat. We got Keith, we got Ellie. Looks like we got One Arm Bandit and the rest of the crew in here. So thank you all for tuning in. If you could, on the way in, if you aren't already, if you subscribe, like, and share the stream if you find value here. We greatly appreciate it, and it helps us grow the channel and get our no-cost educational content out to as many people as possible. We truly just want to educate everyone so that they invest in these markets, at least fully knowledgeable about the risks that they're taking, because that's the most important thing, is just understanding what you're investing in. So with that being said, let's add David to the stage, and let's jump straight into the news. So, first of all, how's it going, David?
Doing great, Mike. Doing great. Really having a good time with this dump.
Dude. I haven't even checked. I've been so busy this morning. I got a Venice token, Venice AI. I got the deep dive for that dialed in this morning and dropped into the Intel library, and then went through and just kind of polished up everything. I added those thumbnails you wanted me to add to some of the ones that you had done. So it just looks super sexy.
Dude, and clean. It looks really good. It looks really, really good. I can't wait to start showing that off when it's got.
Oh, here we go.
Amazing.
Yeah, I'll show it to you. I'll show it real quick. So yeah.
One Arm Bandit, howdy. Good morning, good afternoon, good evening, depending on I guess where you're calling in from.
Right.
Yeah.
So yeah, and Food is Life. What's up? How's it going, brother? So yeah, this is the library. So we got Aster, Liquid, I can't even say
Liquidity.
Hyperliquid, Venice, I said I added this morning. Ripple, Stellar, Ondo, Tron, Canton, basically stable coins, just an overview of stable coins in general. The Athena's USDTB, Avantis, Plasma, and I got another one that just finished before the show started that I'll post after this for Injective.
So, INJ, that'll be interesting because taking a look at the way that the Injective token has been performing, and then you compare that to like what you can actually do on the Injective protocol, which is I haven't used it in a long time, but $6.70 for Injective is kind of interesting. It was down at like $2, I think. So we can take a look at that.
Mike has nice thumbnails. You freaking weirdo. All right. So let's jump right. You're my kind of people. All right. So let's jump right into this. Let's get into the news. All right. So the regulatory golden age. So those that haven't been in crypto or even in traditional finance for very long, there is a long battle between the Securities and Exchange Commission and the CFTC over jurisdiction, because obviously the way government organizations work is the more they're responsible for, the bigger the budget they get. The bigger the budget they get, the more the money they have to hire, and the way the government works is everything's always expanding, everything's always growing, because people are incentivized. Government organizations are incentivized to spend whatever money they're allocated so that they can ask for more money the next time. Because if they don't, then their budget is cut.
It should be the exact opposite.
Exactly. But myself, working in government for 22 plus years, I saw it firsthand, and they are incentivized to be wasteful.
But we give you a pass, Mike, because you were in the military. It's not like you were working at the fucking DMV or something.
No, and it's not like I had a whole lot of say, and all I could do is control what I did. So, I was always, did my best to be responsible with taxpayer money and to be honest, I got in a lot of trouble with my command for basically pointing out, because, and it's out of their pay grade too, but basically just pointing out easy ways that we as a unit, could be more responsible, and they didn't want to hear it. So
Probably
I got in
not.
a lot of trouble. I'd say, a lot of my peers retired at higher ranks than I did. I'll just put it that way. So,
Politics.
to me, my integrity was more important, than money and rank. So anyway,
I hear you.
So the golden age, SEC and CFTC formalized historic peace treaty in a massive structural shift for the industry. The U.S. Securities and Exchange Commission, or SEC, and the Commodity Futures Trading Commission, the CFTC, have officially signed a landmark memorandum of understanding, or MOU. This ends years of aggressive jurisdiction battles over what constitutes a security versus a commodity. So the SEC, their oversight is for securities, stocks, things like that. That's why, those of you that know, they're the ones that were serving Wells notices to crypto organizations and put a bunch of them out of business. Ripple was one of the few, and I'll give credit where credit is due. They used hundreds of millions of dollars, much of which was from dumping tokens.
They just stole it from retail, basically.
Basically, but they fought the law and they won, to an extent. But to be honest, without going too deep into it, I think that we as token holders, in a way, lost, because it not being, crypto not being a security, it actually takes away a lot of our rights as token holders and a lot of their responsibilities to the token holders. So we all celebrated, Ripple winning, because we were told that was going to send the token, to the moon, and it did not happen. So anyway, I don't want to go down that road. I want to stay in the news.
Nah, fuck Ripple.
Yeah. Anyway, so the impact. SEC Chairman Paul S. Atkins noted this eliminates duplicative and burdensome rules, while the CFTC chairman, Michael S. Selig, explicitly stated it intends to usher in a golden age of American finance for digital asset infrastructure. To be determined. I do see where this clarity is going to help. However, a lot of what we are seeing right now is because of the current administration. All it takes is that during these midterms coming up in November, for the House or the Senate to flip Democrat, and in the presidential election in 2 years, potentially for that to flip Democrat, and we go back to what we saw during the Biden admin, where you had Elizabeth Warren, with her little lapdog, which was Gary Gensler, who she pretended that she was at odds with, but got caught sending emails before Senate hearings, the banking committee, where she was going to call him before the committee and grill him over these crypto projects, and how they're just running rampant and laundering money for drug cartels and all this. And she got caught emailing him the questions beforehand, asking him to screen them and change whatever he wants before he's
Mike, what all these people have in common is dishonesty. They all have that in common, whether it's intellectual dishonesty or whether it's just flat out lying. They all share that. That's a character trait, man. And that is a really, really foul character trait. And these people should be nowhere near the levers of power, whatsoever, not at all. And so when you're talking about the CFTC and the SEC signing some MOU, like, dude, I just can't get it. Everyone gets excited about, like, oh, there's an institutional partnership, and some big bank is partnering with crypto. Like, I don't understand why that's good. Like, have you guys ever used a traditional bank? Like, these fucking institutions suck. And not only do they suck, they're flat out evil. And also, the regulatory bodies that are supposed to, make the rules, they're owned by lobbyists. Like, the rules are made by people who used to work at these banks. So, I just don't understand why people are excited about regulatory clarity or anything like this, because crypto is its own parallel system. And unless you want crypto to just become an extension of TradFi, okay, maybe that's what people want. I don't want that.
I don't want it, but it's going to happen, and I'm going to make sure that I profit from it.
I
And
don't think it has to happen. I don't think it has to.
It's going to happen, though. It doesn't have to, but it's going to.
I don't think so.
I 100% think so, because
I don't think so.
People are lazy. Let's be honest.
No. Here's why it won't happen. Because the US dollar is the ultimate shitcoin. It's been mismanaged so poorly since 1971 that people at some point are going to be like, hey, we want like a different treasury asset here.
I think that's wishful thinking.
You think so?
I think so.
I don't know, man. I think that there's a libertarian, like privacy first, freedom focused movement that wants Bitcoin or something like Bitcoin. It doesn't have to be Bitcoin. I would love for it to be Bitcoin, but it doesn't have to be. It's got to be something outside of these TradFi rails. That's got to be that. Because as long as we exist within this US Treasury system, we are all just tax slaves and debt slaves.
No, absolutely. I read the hat. We the people are pissed off. Yeah, no, I get it. There is a group of us that understand the system and how fucked it is. And the problem is the majority of people are lemmings. They're sheep, and they're not educated. Their face is stuck in social media. And pursuing whatever. Living life, just trying to survive. And they don't do deeper dives into ways to disconnect from that corrupt system.
Yeah,
and
you're right.
And it's unfortunate, but that's the majority of people in the world. Is and it's not that they're bad people. It's just that they with only so much bandwidth, and most people are just living paycheck to paycheck with inflation and stuff like that. It's hard to take the time to learn about this stuff. I mean, shit, the learning curve on crypto, currently is insane. And then, these banks and institutions, they're the ones that are dumping the money into it to simplify it, for onboarding and things like that. And that's where people are going to go. People want ease. People love comfort. It's like it's a gilded cage that just attracts people.
It's a drug. It's a drug, man. And then, once people, have the house and the job and, maybe you got a family, now you're responsible for your family. And that means you got to show up to this fucking job. It's like, yes, master. Yes, master. I'll be there on time, master. I swear.
Yeah.
Like, fuck, man. And then, you got the government. What are you doing? You're paying 6 months of your time, the labor that you get compensated for
in taxes,
6 months out the year. Just let's just get that stolen right from you real quick.
Yeah,
and you have no say in that.
Income tax, sales tax, gas at the pump, property tax. Licensing for your vehicle. If you want to go fishing, license. If you want to go hunting, license. If you want to start a business, license. With fees, and then you got to pay taxes on all that.
And then your kid comes home from school, 7-year-old boy talking about, I think I'm a girl now. Like, you got that shit to worry about.
That aside, it's insane to me that people are okay with 5 months, 6 months of their wages, in one way or another, going to the government, has so much money that they don't even realize.
But dude, it's fake. The money's not real. It's literally.
Man. We do this all the time. All right,
I know, but we're talking about SEC, CFTC,
All right. Back to the stories. This is a Thursday discussion. All right,
that's tomorrow.
So institutional DeFi. So BlackRock integrates the BUIDL fund with Uniswap. Wall Street giant BlackRock is diving straight into native decentralized finance in collaboration with Uniswap Labs and Securitize. BlackRock has integrated its institutional tokenized fund BUIDL directly into Uniswap. The impact: instead of keeping tokenized real-world assets locked in private institutional silos, this move brings institutional liquidity directly into the world's largest decentralized exchange protocol, heavily legitimizing DeFi's core utility. My take on this is, I don't know if I'd like this, because this is going to do one of two things. Either it's going to make, and I think it's going to be the latter, but I think it's either going to make a lot of these institutional offerings more decentralized, or it's going to incentivize these historically decentralized protocols to become more centralized. I think that is what's going to happen. But David, what's your take on this?
Well, I actually kind of like this. So here, let me share my screen real quick, because
Yeah.
I couldn't believe that that's real. That what, there's a BUIDL ETH liquidity
Yeah.
pool on Uniswap.
Yeah.
Like I kind of like that actually. This is interesting to me. So you see what I'm showing on the screen here. So
Yeah.
it says here that I can swap ETH for BUIDL, and I mean, so just, you got to understand, what is BUIDL. BUIDL is toxic sludge. Okay, so
Yeah.
it is risk. It is return-free risk. U.S. Treasuries.
It's a tokenized real world asset. It's a basket of assets that BlackRock put together.
Right. So BlackRock is not our friend. It's
No.
like, whenever
No.
people are like, "Oh my God, BlackRock," it's like, dude, BlackRock is not here for us.
No.
Okay, BlackRock is not our friend. BlackRock is our enemy here. And this U.S. Treasury, like it's basically subsuming all of crypto. Like it's RWAs and U.S. dollar stablecoins. That's what crypto is becoming, and it should be denominated in Satoshis, or maybe even in ETH, but definitely not in dollars. Whatever. I'll get off my soapbox there. But I'm very curious to learn more about the pools that contain the BUIDL token. But the problem with the Uniswap is that their Explorer is horrible. Like if I go to Explore pools, and then let's say I want to search for a pool that contains BUIDL, like I type in the token, I get nothing. Like, dude, Uniswap, if you're listening, what the fuck? Like, fix your thing, man. Like, you got to be able to search for a pool by typing in one of the tokens in the pool. Like, you guys are one of the largest, if not the largest, decentralized exchanges. Why does your UI suck so bad? It really, really is frustrating to me, because for as long as I've used Uniswap, their user interface has fucking sucked. So
Yeah.
I've got to use a different protocol to find the BUIDL pools. So to do that, I like to hop on over here to Revert, revert.finance. And so let's just say I'm over on mainnet, and the tokens I'm looking for, I want to find a pool with BUIDL. Yeah, see, token not found. But there's got to be a pool that contains BUIDL if I can swap ETH for BUIDL. But this might be fake. This might be a fake token. So let me hop on over here to CoinMarketCap real quick, and let's just see, like, what is the contract address for BUIDL? Horrible name, by the way. Like, who came up with that name? There it is, BUIDL. So is this even the right thing? Looks like, I mean, looks like it probably is. Maybe it just hasn't launched yet. Is that what could be going on here? Maybe it just hasn't launched yet. So now that I've got the token contract address, I can pop back over here to Uniswap, paste that in. There it is. Okay, continue. Thank you. And yeah, I mean, I should be able to swap, dollars for toxic sludge, BUIDL tokens. You see, one challenge for me, Mike, is I don't know if this is gated or not. So it might be gated. I thought that BUIDL.
So right here, securitized market serves as the bridge between traditional finance compliance requirements and decentralized trading infrastructure. Every participant must pass through Securitized's verification and whitelisting process before
See,
access the trading capability.
that's
This
what I'm
ensures
talking
that
about.
this
Yeah.
ensures that only qualified investors who meet
You
regulatory
gotta be
standards.
qualified. You gotta be
Yeah,
regulatory standards and all this
you got to
bullshit.
be rich. To make money, you got to be rich.
Yeah, I mean, what the fuck is that? Like, if I'm an everyday investor and I want to be able to hold some US treasuries, maybe for security in my portfolio. Maybe I just want to be able to hold some of that, right? You can't do it. You can't do it. Like if you want to, if you really want to, there's like two tokens. I think Open Eden has a US Treasury token, and Circle has a US Treasury token, but the fees are super, super high. There's another one that has like a 30-day gating period. I think that might be the Circle product. Like
Mhm.
these products really suck, so either you're going to get bent over a barrel with fees, or you're going to get your capital locked up for at least 30 days, or you're not even going to be able to invest in these things because they're gated and you got to pass some KYC, and they got to, examine your butthole and make sure that like you're good, like what the fuck, dude?
Yeah.
Like this
No.
stuff is crazy, man. I
It's
just
to me, if I'm an adult, I shouldn't need permission to invest in something or to do anything really. I mean, yeah, it's I don't know.
I, li- I
That
like I like permissionless. I like that's why I love crypto and DeFi, because this is permissionless. If it's not permissionless and it's gated, then it's just gay, I think.
it's gated. Yeah.
Yeah.
Emphasis on the gay.
Yeah.
Oh, here we go. Yeah, here we go. Keith said it in the chat. It might be gated.
Uh,
It's Pride Month. All
when
right.
is that going to go away? When is pride? Like pride is a sin, dude. Like it's
Well,
one of the seven deadly sins. Like
you know what?
why are
You
people?
know what bugs me is like freaking, and I'm kind of biased, but like the military, we get like a day. Freaking, gay people get like a whole month. It's like, just the priorities.
It's fucking
All right.
gross, dude.
So global TradFi crypto convergence. Um, Traditional brokerages and crypto giants are aggressively crossing over into each other's territory this week. Binance rolls out 24/5, so not 24/7, 24/5 US stock trading. Binance has officially expanded its traditional finance footprint by enabling the trading of over 7,000 US stocks and ETFs directly on its platform. It features fractional shares for as little as $5 and round the clock trading during the week. So this is something that tokenization allows for, is fractional ownership. So real estate, pretty much anything. Once it's tokenized, it allows for it to be divvied up. You don't have to buy full shares. You can buy fractional shares, and and again, it's kind of like Satoshi's and Bitcoin. The token is you can buy a bunch of Satoshis and kind of DCA into it and get to a point to where you own a full share or a full token. So it's kind of the same, kind of the same. But I mean, what are your thoughts on the tokenization of stocks and traditional vehicles or assets, and those being listed, and and the advantages that that brings to DeFi?
Oh, Mike, I think it's great. I think that tokenizing equities is great. Tokenize everything. The only problem for me is, you know, a lot of these things, the initialization, or the what's the word, when you have an IPO, the initial offering, when you take it to the market, there's a word for it. I think it starts with an O. It might start with an I, not initialization. So if I'm creating a liquidity pool and I initialize that liquidity pool, that's the term for creating a liquidity pool. Origination. So the origination of these equities needs to start happening on chain, not off chain.
Mhm.
And when that happens, well, you know what? Then we're talking about, on-chain native equities. Right now, we're talking about some type of either a wrapper or some type of synthetic, where you're able to trade like those HIP3 products over on Hyperliquid, or some synthetic on some other decentralized exchange somewhere, or on a centralized exchange, you're able to trade some type of, equity wrapper product. It looks like what they're doing on Binance is, some type of equity wrapper. But okay, great. I'm all for that. The only thing is, like, if you're using Binance, well, then, they are beholden to the US government and whatever government, you're operating in, the region of the world that you're operating in, Binance is beholden to them. So I would be really, really careful about using Binance. It's just not a protocol or not an exchange that I would ever use.
Honestly,
Um,
after October 10th, I won't touch any Binance or anything Binance is a part of. Just it just to me that showed way too much. I saw way too much on October 10th that I can't unsee. As far as yeah. Anyway, so we got two more stories, and then we'll get into the deep dives. Again, I want to save the last 15 minutes or so of the show for the socials. But Hyperliquid defies the market slump with massive hype and new tech, while broader markets are moving sideways, with Bitcoin compressing between 65 and 68. The decentralized derivatives platform, Hyperliquid, is stealing the spotlight. So the tech, Hyperliquid rolled out HIP4, introducing binary outcome contracts into their unified margin exchange to completely eliminate collateral fragmentation for institutional traders. The market, its native token Hype, surged past $62 on the back of its unique mechanical model. The platform's assistance fund recycles 99% of all trading fees back into the token buybacks. We went over this during our Hype deep dive, with the video and the slide deck and all that stuff that you can find again on our website, the Node.pro, in the Intel section. Feel free to go over there and check it out if you missed it. But David, what are your thoughts on? I mean, we've talked about Hyperliquid a lot, so there's probably not a whole lot more to say. But what are your thoughts on how Hyperliquid is kind of bucking the system? As the rest of the market moves down.
I love it. I love what Hyperliquid is doing. It's, I think, probably the only protocol that actually makes like decent amounts of money. Aside from, and I could just share the screen real quick, Mike. But
Yeah.
aside from a protocol like Tether or Circle, Hyperliquid is the only DeFi protocol that generates a ton of money, a ton of revenue. And I really like the look, you can trade equities here on Hyperliquid. You don't have to go to evil Binance. You should, if you're going to trade equities, don't do it on Binance. Do it on Hyperliquid. This is the place to go, not Binance. So, the HIP3 contracts right here, this is what you want to be taking a look at. I mean, look, you can trade, if I just scroll down here, even Korean equities like Hyundai, or Chinese equities like Tencent, or baskets of nuclear products like this nuclear basket here. And if we just take a look by funding, the funding rates here, if you want to run funding rate arbitrage, which is one of the plays that I've been taking a look at running, if you are short Hyundai over here on Hyperliquid, you're going to be earning that funding rate of 400%. If you're then long Hyundai over on something like Ask Felix, you can get to delta neutral, and then you just isolate that funding rate for 8 hours. And so if you go in here with some size and you're doing 400% for 8 hours delta neutral, and all you do is go from play to play to play, and every 4 or 8 hours you're just moving your capital from one play to the next, well then you're doing more than 1% per day if you can continue to find excellent plays like this. So I really like the ability of any investor anywhere to permissionlessly be able to trade these equities without having to be like an accredited investor, or without having to pass some onerous KYC process. So yeah, and the fact that Hyperliquid, its token, continues to perform extremely well, as ETH is dumping and Bitcoin is dumping. If we take a look at Hype, Hype USDT at $72 almost, basically sitting just underneath resistance. So here's the thing, Mike, like if Hyperliquid breaks out as Bitcoin is breaking down, let me just move this one to the top of my watch list here. So if Bitcoin and ETH continue to break down, that's going to drag all the rest of crypto down with it. Even though I know Bitcoin dominance has been falling off a cliff here because a lot of alts have been rallying, including, a shitcoin like ICP. So we're going to take a look at ICP later today. I think we're going to learn that it, maybe is not the best. But when you take a look at hype, though, if we break out here, man, this thing could really run because there's nothing else in crypto to allocate to. Like you don't have there's no other options. Like what else are you going to buy? Especially when you're talking about the stuff in the top 20, if you look at coin market cap and with everything dumping, Bitcoin, ETH, BNB, XRP, Solana, Tron, Doge, Zcash is up on the week. Hyperliquid is up 20% on the week. Even Stellar is up on the week, which is like mind blowing to me. So basically, like, what are you going to buy though? Stellar doesn't make any money. Zcash generates a lot of fees. We need to dig into the fees that are generated by Zcash. That's definitely real. I've read quite a bit about the fees that protocol generates. We need to learn more about that.
I'm sorry.
Zcash.
Oh, gotcha.
So my understanding is that Zcash generates a lot of fees. And then, yeah, we'll do that one tomorrow. And then, but hype is the king, outside of Tether and Circle, which, the reason why they are so profitable, Tether and Circle, is because they buy treasuries that pay 4.5%, and then they distribute none of that yield to token holders. So they buy treasuries, mint these USDT, USDC tokens.
Circle has like a couple of dozen freaking employees. So they have like almost no overhead. So yeah, they're making money hand over fist.
And also it's illegal for them to pay that interest because the big banks lobbied to make it illegal. It's like, dude, like we don't have representatives in Congress or anywhere around the world that represent us. Nope.
No. So I actually, in the chat, One Armed Bandit said, do you guys think Coinbase will purchase Hyperliquid? Heard some rumors going around.
I hope not. I hope not.
So I just did a quick search, and this is what I found. There is no official talk or plan, but confusion regarding this stems from a strategic partnership announced May 14th of this year, where Coinbase became the official USDC treasury deployer on Hyperliquid. As part of that specific transition, Coinbase acquired the right to purchase the brand assets USDH, a native stablecoin previously managed by native markets on the Hyperliquid platform. The breakdown of the official agreement. The USDC Treasury Partnership. Coinbase is now the official treasury deployer of USDC on Hyperliquid, utilizing the platform's aligned quote asset framework to manage liquidity. USDH brand acquisition. Native markets agreed to terms allowing Coinbase to acquire the USDH brand assets because USDC is now the primary stablecoin for the platform. The USDH stablecoin is being sunsetted over time. Continued independence. Hyperliquid remains an independent, decentralized, on-chain perpetual trading network. The deal focuses on integrating USDC as the platform's standard stablecoin rather than a broader acquisition of the exchange itself. So,
yeah, so they were having Hyperliquid was having a difficult time, getting traction for its USDH native stable. So they're sunsetting that product and instead, they're moving to this Coinbase USDC partnership because they need another sink for a token supply. That hype token.
Yeah. And I mean, I think that it's probably a move to use stable coins that are compliant so that they don't have to be fighting, governments and, that kind of thing around the globe.
Yeah, maybe that too. So, I mean, I just hope that Coinbase doesn't buy Hyperliquid. I hope that doesn't happen because I'm not a fan of centralized exchanges. Coinbase is just another bank. It's like, okay, you could go Wells Fargo, Bank of America, Citibank, Coinbase. Like, I think of them in the same way. Like, so I don't want anything to do with that shit. I avoid using Coinbase as much as possible. But sometimes you gotta use it. Er, rarely. I'm almost always capable of getting done what I need done without using a centralized exchange. But sometimes in a pinch, it's convenient to use one, only for off ramping. So yeah, I don't know. I'm just not a fan. Not a fan of Coinbase, and not a fan of their product. Not a fan of centralized exchanges at all. And I really, really hope that they do not buy Hyperliquid. Those are my thoughts on that, there, Mike.
All right. So last story, and then we're going to go jump into the deep dives. So global crackdowns. The OFAC sanctions major crypto exchanges. On the compliance and legal front, the U.S. Department of the Treasury Office of Foreign Assets Control, or the OFAC, has officially designated and sanctioned 4 major Iranian crypto asset exchanges: NoBitX, WallX, Bitpin, and Ramzanex. Honestly, who cares?
Right. Well, I
Yeah,
mean, so what is that OFAC or whatever? I keep hearing about those fuckers. Like,
it's the U.S. Department of Treasury Office of Foreign Assets.
okay. So they're the ones that go around just saying, "Hey, you can't use dollars anymore."
Well, basically, no. I mean, sanctions. So when the U.S. sanctions a company like Iran, then the Treasury Office of Foreign Assets is probably just saying that since those platforms are based in Iran, then they're part of the sanctions. So
Why is it got to be called Iran? Why couldn't it be called iWalk or I Shuffle?
or
But
iPod. Yeah.
yeah, iPod. But I mean, look, I'm all for freezing that evil Iranian, those mullahs, freeze all their shit, kill them, great. But like the problem though is that the dollar can be frozen at all. Like, that's a problem, man. Like, look at what Biden did, freezing Russian treasury assets at the start of the Russia Ukraine conflict in 2022. Well, it probably wasn't Biden. He's like not even fucking conscious half the time. Whoever had the auto pen, sanctioning those Russian held US Treasury assets, that was really, really stupid, because what it did is it tells the world, if we don't like what you're doing, we're going to steal your money. We're going to freeze your money.
We're going to put you in timeout.
Permanent timeout.
They basically weaponized the U.S. dollar and U.S. treasuries.
Not a good idea, man, because it's going to push people out of dollars.
Well, that's what really started creating that whole BRICS. That whole BRICS movement, where you had Brazil, South Africa, Russia, China, and I think India was getting in on it.
So hold on a second. Those are all countries that, like, dude, if you offer me a financial product from any of those countries, I'm good. I pass. Thank you.
Regardless, it was picking up a lot of steam. You had Saudi Arabia that was looking at joining. You had a bunch of different countries that were looking at joining, which would destabilize the U.S. dollar as the reserve currency.
I don't think so. I don't think so at all.
Regardless, it shows fractures, or cracks in the U.S. dollar dominance. That there's countries that are willing to step away from the dollar for it, to get away from those sanctions, and that the weaponization, financial weaponization of the dollar and U.S. treasuries.
So, Mike, you know what fixes this?
Bitcoin.
That's right.
Yeah.
Bitcoin fixes this, man. Because it's non-sovereign. That's the whole thing. It's permissionless and non-sovereign.
The only problem I see with Bitcoin that gives me pause now is the news that we covered, where there is a way for there to be votes, like when they were talking about Satoshi's, tokens in his wallet, where they were, basically going to reach in there and burn them. They were going to vote to, burn them, or something along those lines. And I was like, what? Like, so I can, there is a way for, your Bitcoin to get, people to touch, with their dirty little grubby paws, your Bitcoin.
Yeah, but so that was there isn't. So that was a BIP. And getting a BIP passed is like super, super difficult and takes a ton of time. So just because there was a BIP proposed, like I could propose a BIP right now to transfer all of Satoshi's Bitcoin to me. I am Satoshi. Okay. Like
Yeah.
it doesn't mean that like it's gonna happen, right?
Yeah.
Um, and no one's going to vote for that. Like that would never happen, not in a million years. But yeah, man. So you want to go ahead and transition on over to
Yeah.
the deep dives here?
Yeah, because we're at about that will give us, if we do an hour, like 30 minutes on each one, that will give us about 20 minutes for the socials at the end.
Sweet. So let's see here. We're going to start off with near. And the reason why we're going to start off with near is, I mean, look, near is amazing. Well, specifically near intense. Okay, so we've got to distinguish between near DeFi and near intense. So basically, what near did, what the protocol did with the intense, is they solved cross-chain bridging. That's basically what they were able to do, because anyone who's been in crypto and DeFi for any period of time has at some point had to bridge assets from layer one chain A to layer one chain B. Let's say that you've got spot Bitcoin on the layer one, but you need spot ETH on ETH mainnet. How do you do that? You use a cross chain bridge. And sometimes using these bridges can be scary because you end up swapping your asset, bridging your asset, and for 20 minutes, 30 minutes, sometimes 45 minutes or longer, it's just kind of in limbo, where it's no longer in your wallet, but it's also not, it hasn't landed yet in the destination wallet on the destination chain. So these bridges have been sometimes terrifying to use. And they've also been a source of a lot of exploits. So, like bridges are great attack, like a way for hackers to steal funds is through these cross-chain bridges. They can easily be attacked. I mean, how many different exploits, Mike, have we seen just in the last, year to date, right? And how many of them had to do with bridges or some type of bridge contract? A lot of them. And it can be really, really scary to use a cross-chain bridge sometimes. But Near fixed that. And so I want to just show the near.com protocol just real quick, because this is the actual thing. Like I want to show everyone the thing. Like here's the
Don't.
thing.
This,
This thing.
PG-13. PG-13.
so so this is the product. Okay, so this is the near.com product. Now if I just go ahead and sign in, okay, and then here now I can sign in with my wallet, and you can use touch ID or face ID if you want to create an account. So what you're doing here is you're creating a near account, and I could use any of these wallets. I choose Rabby, but you could use a bunch of other EVM chain wallets. you know you could use Wallet Connect. You can use a Near wallet to connect here. I've got which one do I have? I've got Nightly, so you can use Nightly to connect here. I've got a Ledger. You can use a Ledger to connect on Near natively. On Solana, I use Phantom. You can connect with Phantom. On Ton, I use Ton Keeper. You can connect on Ton. On Stellar, I use Freighter. And then on Tron, you're going to use Tron Link to connect. So let's go ahead and connect here. I'm going to use Rabby, and I've got a hot wallet all set up for this purpose. And okay, so one thing is that there are constant updates to this. So you see down here where it says incident detected and view status, and then up top it says Zcash, TON, and Plasma are currently not available. So, look, that's one thing with new tech, right? There are going to be, outages, problems. And it looks like for right now, Zcash, TON, and Plasma are unavailable. Okay, so keep that in mind. But this is permissionless cross chain swapping of spot assets, and it can be made confidential. You see that up there? Confidential mode. So your
Mhm.
main account is a standard blockchain account. So
So there's a
activity
price.
is there is, yeah.
Nice.
So your main account is standard. So activity is visible on chain. Your confidential account keeps your balances, activities, and transfers private on the blockchain. So you can move funds between accounts at any time. So think about if you're in your near.com account and you've got Zcash, let's say, and that Zcash, you want to be able to move it into maybe ETH confidentially. I don't know why you'd want to do that, but maybe you want to do that. Well, you can do that, and it will not be tracked by some auditor somewhere. So you can retain your privacy, which is really really important. I love this. So confidential mode is super cool. Now, let's say that you want to, use this protocol. How do you do it? Well, click on receive right here, and you can't receive from a. Oh, yes, they just launched it. They launched it like today or yesterday.
Nice.
Wow, this is so cool. So this is like this is you could use this in conjunction with some type of fiat on ramp to privately on ramp from fiat into crypto.
There
That's
you
what this
go.
is.
Now you don't have to
Yeah.
do that, all that weird stuff that you were having to do before.
So this is like a super really big deal. This is a big big deal. Like being able to do this, oh man, just amazing, amazing. Um, so yeah, I really really like this. Um, and let's see here. So, but if you want to just receive, in regular mode, then you're going to receive from another wallet. What token do you want to send? Well, you can send. It looks like so. Keep in mind right now Zcash, TON, and Plasma are not working, but you could send USDT or USDC or Solana or spot Bitcoin or spot ETH or spot Doge or any of these assets. Spot XRP, spot Stellar, spot BNB, spot Tron, spot ADA, Cardano, spot Bitcoin Cash, spot Sui if the Sui chain is still up, spot AVAX, spot Tom, spot
Mhm.
gold. You can use any of
There's a
these
lot.
tokens.
There's a lot of different assets to choose from.
Right. So let's say that you want to receive, spot Sol on Solana. Okay, great. So here's my address. You can send me some spot Sol if you want. But so
So
once you.
Wild, welcome to the show. Thanks for the comment. And I'll take a look at Convex Finance as a protocol, and if it looks interesting, we'll do a deep dive on it.
So yeah, for sure, 100%, and welcome. So let's say I want to receive some spot Sol, right? Okay, after I receive it, then I can hop on over here to swap, and I can select my spot Sol, and then I can swap it for whatever I want. Any of these assets. It takes just a couple of seconds. It's completely permissionless, and it can be made completely confidential. And so if I take my spot Sol and I swap it for spot near, then I can send my spot near to my nightly wallet and use it on in near DeFi. So this is such a big deal. And I've been using this protocol. This is my cross-chain layer one bridge of choice. This is just an amazing, amazing protocol. I love what they've built. But I want to learn more about the tokenomics. But before we get into the tokenomics here, Mike, one of our community members, he posted something earlier today, and I want to just share this because let me share this.
Probably Scotty.
So it's right here. You see this one? Let me, if you want to bring that one up to the fore. So this
Oh, Matt
right here,
Buddha.
yeah, in
Yeah,
right
Matt
here.
Buddha's new.
So this is really cool. I want to play this because this is I don't know if I can play this from
Oh,
within Discord.
Arthur Hayes.
Yeah, well, I mean, it's only a couple of seconds, and I want to just see what they're talking about when it comes to near tokenomics. Now, look, I like Arthur Hayes a lot, but a lot of his predictions, when he was calling for, and I think he might have been just doing this tongue in cheek, so to speak, but when he was talking last year about Bitcoin, I mean, his predictions, like every single one that he made was not exactly like he's not Benjamin Cowan status. Okay, let me put it like that. When it
Yeah,
comes to Bitcoin price predictions, he's been pretty good when it comes to shitcoins though. So I want to see if we can listen to this. I think this is all of how long is this? A minute 26. So let me know if you can't hear this. Okay.
got to hit play.
You can't see it.
I can't see it, and it's still minimized. It's not full screen.
Gotcha. Okay. Let me share a different one here. So we're gonna take a look at this here, and I'm gonna add this to stage. Here we go. Let's take a look and let's see
There.
what these guys say.
When do you think that near is going to be deflationary in terms of the revenue generator from all these amazing things you've described versus sort of the endemic token inflation that's baked into the protocol?
Yeah, I mean, the goal definitely target next year. And like again, like we'll push to keep reducing inflation. I think there's something that like a lot of builders in kind of blockchain space have talked a lot that like we've overpaid for economic security. Like it's really not it's not really worth that much in what we're paying. At the same time, it's actually been like economically e- political economic hard to actually reduce inflation, right? And so we've been building out governance mechanisms to actually do execute on that, like in a straightforward way. So I'm kind of pretty confident we can get the community to the level where it's like, hey, look, as the revenue grows, it makes sense to reduce it and actually really balance it out. So kind of next year with both like growing revenue and reducing inflation, and also we're working on a few interesting ideas around like how can we fund security and validators in a different way that goes beyond just like traditional inflation. Yeah.
Cool. So look, I love the near.com cross-chain intense bridge. I really do. It is like, and plus that alpha mode, right here. Let me just share this one instead so that we can all take a look at this together. So, this being able to in confidential mode, if I hop on over to home and click on receive and click on from wallet or exchange. So being able to receive confidentially means that I can now on ramp privately. And I don't think that there's another way to do that. Now, the off ramp part, being able to spend your digital assets in real life, if retailers and businesses and individuals demand payment in digital assets rather than in fiat shitcoins, then all of a sudden that solves the off ramp part too. So if you can on ramp from fiat tax slavery, that tax matrix into crypto permissionlessly and privately, and you can buy products and services in real life with your digital assets privately and anonymously, well then boom, man, that's the holy grail right there. So really, really like what Near has built here. This is just amazing. But we got to take a look at the tokenomics, and we're going to jump into the deep dive here in just a second. And what I want to take a look at first, though, Mike, is we got to check out Near's price action. And today looks like got up to $3.07 earlier in the session today. Look, this is great. The fact that we broke out, then this is a long-term level of trend line resistance, this white level, this white trend line that I've drawn in there. So you've got this 200-day moving average down here. NEAR is trading well above that 200-day moving average now. That 200-day comes in at $1.51. This is
look how it respected that trend line, though. How it pumped
beautiful.
up. Yeah,
beautiful.
Came down, bounced right off that line, and just shot right back up.
Beautiful. So you got the breakout right here, you got the retest, and you got continuation. Yeah. So breakout, retest, continuation. Exactly what you want to see, if this is the start of, a trend reversal. Because if we zoom out, this NEAR token, man, this could be really like an amazing opportunity, because the all-time highs here are at $20, so, and it's trading for $2.86. Here's the problem, though. Like, let me just go ahead and move this one up to the top of my list here. And I want to grab, I need to add Zcash to this too. But the problem is, Bitcoin. Bitcoin is the problem for NEAR right now. Because as long as NEAR remains correlated with Bitcoin and Bitcoin continues to move lower, well, then that's going to be a problem. But take a look at what NEAR is doing in Bitcoin terms. So NEAR is starting to pump in Bitcoin terms. That's a big deal. And in Bitcoin terms, I think that it's probably a better idea just to measure everything in Satoshis. So in Satoshis, NEAR is well above that level of resistance that I've got drawn on the chart in US dollar terms. So right there, NEAR is above it. So this is starting to shape up into a little bit of a reversal. And I like this. I like this one quite a bit.
So Keith is saying, that he feels it's undervalued because Intense has passed 20 billion in cross-chain swaps.
Well, so here's the question. How do you determine whether it's under or overvalued? So just because they've got a ton of cross-chain swap volume, does that mean that there are revenues accruing to the NEAR token? Does it? I don't know that it does right now. Maybe it does. Maybe it doesn't. But we've got to find out one way or another here. And so that's what we're going to do with this piece of deep dive research. So if anyone is curious about running through this research, just hop on over to the node.pro, click on Intel Library. And this is, I think, the first article here. So we're just going to take a look through, and you can read through this piece of content on your own time if you'd like to. We put together, I think, the best deep dive research content in crypto and DeFi at the Node Network. So take a look. We got really nice slide deck here we can run through at some point. You can download this stuff too. And here's the source material. So I always make sure to include the source material so that anyone who wants to know, like, hey, where did you get this piece of information from? It's always right here. And you can see all of the sources that are cited here too. So let's check out this piece of video content. I think this is going to be great.
Blockchains have historically faced a very harsh physical reality. Achieving extremely high network throughput almost always requires abandoning decentralization. Monolithic network architectures try to solve this by scaling vertically, but that approach relies strictly on the single-core speed of processing hardware and the maximum bandwidth of the network, creating a hard physical ceiling on capacity. The alternative has been modular layer 2 scaling, building roll-up networks on top of the base layer. While this handles throughput, it fragments user liquidity and creates highly complex, disconnected user experiences. NEAR protocol moved away from operating as a simple sharded database to become an integrated cross-chain execution and economic hub. By deploying an architecture known as Nightshade 3.0 alongside a multi-party computation signing protocol, NEAR has demonstrated over 1 million transactions per second on commodity hardware, positioning itself as a native settlement layer for entirely separate blockchains. To understand how this system operates, we have to look under the hood at two distinct mechanisms: its internal state scaling engine and its external cross-chain command architecture. The traditional bottleneck in a sharded network comes down to synchrony. Historically, block producers had to process both consensus voting and transaction execution at the exact same time. If execution lagged, the whole chain slowed down. Nightshade 3.0 removed this constraint through a structural rewrite that now completely decouples transaction execution from network consensus. In this visual model, the block production pipeline is split. The consensus layer is now strictly isolated on its own track. Its only job is to establish the ordering of transactions and secure the block history. Meanwhile, actual transaction execution is pushed to asynchronous nodes on a secondary track. Because execution is separated, it can lag slightly behind consensus without delaying block production times, effectively buffering the network against sudden spikes in volume. To validate this asynchronous model, the core engineering team ran a production-grade benchmark. By routing data directly into the mempool across 70 active shards, the protocol successfully processed over 1 million transactions per second. This throughput was achieved without relying on specialized supercomputers. The test was executed on standard Google Cloud virtual machines using 8-core AMD EPYC processors. By deferring execution asynchronously, the network gains the elasticity required to absorb massive transaction volume spikes natively, right at the Layer 1 protocol layer. Processing 1 million transactions per second creates a secondary problem: severe storage bloat. Traditional proof-of-stake nodes must store the entire history of their assigned shard locally. To solve this, Near introduced stateless validation. This divides network duties into 2 distinct node classes: heavy, stateful chunk proposers and lightweight, stateless chunk validators. Chunk proposers are tasked with packaging incoming transactions. They take the raw data and generate a mathematical state witness, a compact payload containing all the try-proofs necessary to execute the chunk. Because there are fewer proposers required, they can maintain the active shard state directly in their system memory. This 48 GB RAM requirement eliminates the standard read and write latency of traditional storage drives. The stateless chunk validators do not store the local state of any shard. They simply receive the state witness payload directly from the proposer. Upon receiving the witness, these lightweight nodes execute the transactions against it. They mathematically verify that the resulting state root matches the proposer's claim, requiring minimal memory overhead. The economic impact of this architecture is immediate. The cloud execution costs for operating a validator seat drop to roughly $280 to $520 per month. By drastically lowering the physical hardware requirements, the network maximizes its decentralization vector by reducing the financial barrier to entry for validator seats.
Okay,
This
so
raises a critical...
let me pause it right here. So if we're talking about validator seats, like, dude, this is super cool. So if we, like Mike, we could run a near validator.
Yeah.
You know, it's only like, I think the problem with, and I haven't verified this, but I think that if I had to guess, running a Canton validator would likely cost a lot more than $200 or $300 a month. That would be my guess here. But running a near validator for $200 or $300 a month, I'm assuming that we would be compensated in near tokens. Dude, I gotta take a note on that. So learn. I wrote down Lear. Lear. I left the end off.
It's because of how all the leering we do here.
We do so much leering. So Lear.
I can't stress enough the importance of leering.
Lear about near. Lear about near validators. So I want to see if maybe we can run one for the company, you know, like a node network near validator.
That reminds me, we need to look at that, and we still need to look at the Canton one.
Yeah, we got to learn about near validators and Canton validator, because I get these emails from them. I was like included on some list, and I think that we got approved, but
we did on the Canton one.
I'm pretty sure, man, but I can't, like, I gotta figure out where to log in to actually set the thing up and how much it would cost and all that. But this is really cool because, hey, if we can create a near validator and just, like, you know, I could run it on a GCP instance and, you know, Google Cloud. I could just run it on Google Cloud, a VM, and then all of a sudden, you know, we're earning near. And so if we're paying $300 a month to run the validator, but we're earning $350 a month in near tokens, well, then it's a no-brainer, right? And especially if near, you know, number go up, well, then, hey, that's a real good deal. So
Scotty, I don't think it's Spanish. I think it's Somali. You know, leering, I think it's Somali.
Yeah.
I'm pretty sure.
So leer. So it's not scoot boy. It's Spanish is to read is leer. So yeah,
No,
I'm pretty
I'm
sure.
almost positive that that talir is a Somali word for daycare.
Yeah.
or fraud. That one of the two. I think it can be used in both contexts.
Yeah.
Entry for validator seats. This raises a critical security question. If hardware requirements are universally low and the validator pools assigned to each shard are small, what prevents a malicious coalition from taking over a specific shard? The primary defense is dynamic reassignment. An on-chain randomness beacon frequently rotates the stateless validators across all network shards on a block-by-block basis. The security of this rotation follows a specific mathematical model. The probability of sampling malicious validators within a random pool is defined by a hypergeometric distribution. A shard is only compromised if a specific fraction of its assigned validators are malicious, allowing them to force an invalid state transition. By applying the Chernoff bound to this distribution, we can calculate the absolute upper limit of a failure occurring anywhere across the entire network. The math shows that as the total validator pool increases, the probability of a shard corruption event drops to approximately 10 to the negative 11th power per block. Translating that statistical probability into real-world time, with a 1-second block time, the expected duration until a mathematical security failure exceeds 3,000 years. NEAR substitutes the necessity for massive hardware barriers with mathematically rigorous, dynamic cryptographic security. With this high-throughput internal state secured, we can look at the primary application layer it supports, the infrastructure for autonomous cross-chain commerce. This relies on the concept of an intent. Instead of executing a rigid sequential path, a user signs an off-chain cryptographic instruction specifying a desired outcome, like exchanging exactly 100 USDC for 99 USDT. These intents are managed by the intents.near verifier contract. This contract...
Okay, so this is super important. These swaps in your NEAR account are atomic. They're atomic swaps. And we're going to learn...
I mean, for people that don't know, what exactly is an atomic swap?
It either completes 100% based on the instructions that you gave it, or it reverts. So you either get exactly what you expect to receive, or you get your assets back.
And if you could, like, explain why that is in practice, why it's so important. Because I mean, I understand that that basically, or what it prevents. I guess that's a better way of putting it. Like, what does that prevent?
So think about it this way. Let's say that you've got one BTC, right? And you want to swap that one BTC for USDC on the base chain. Okay, you want to go from spot Bitcoin to USDC on base. Now, if you're not using an atomic swap, then you're probably going to be subject to massive
attacks,
all sorts of attack vectors.
Yeah,
and
slippage,
attack vectors, all of it. So if you
not all slippage is good. Some
slippage that's not good. So let's say that you execute that swap. It's bad. So let's say that you execute that swap, right? And you got one BTC, it's $65,700 right now, and you swap it for USDC and you receive $63,000. It's like, what the fuck? What happened to that $3,500?
Yeah.
Well, you got sandwich attacked, and you got slippage, and then you got fees on top of that. So that's what happens in a normal swap.
You were on the receiving end of slippage.
Yeah, you don't like, that's not good. That is bueno. You don't want that. No good. But an atomic swap, when you see what you're swapping before you execute the transaction, that is exactly what you will receive, or the swap will revert and you'll get your original assets back.
Nice.
So it's all or nothing.
I just want to make sure everyone understands what an atomic swap is. So
100%.
Continue.
Acts as a trustless internal ledger, allowing cross-chain outcomes to settle without relying on centralized bridge custodians. The process begins in the deposit phase. Users lock supported assets into the verifier contract, which registers those balances onto its internal state ledger. Once deposited, the user's intent is broadcast off-chain to a message bus. Here, independent market makers, known as solvers, compete against each other to provide the most efficient route and exchange rate. When a match is found, the atomic execution phase begins. The verifier contract validates the signatures, ensures the inputs and outputs match exactly, and executes the trade atomically, purely within its own internal state. Finally, during the withdrawal phase, the internal ledger balance is burned. The contract triggers a cross-contract call to a token bridge, delivering the native assets to the user on their destination chain. By settling trades entirely within the internal state of a highly scalable ledger, users effectively bypass the latency, security risks, and exorbitant gas fees of executing live trades across multiple isolated blockchains.
See, that's what we were just saying, and this is permissionless too. And with that new alpha version of the confidential, I guess you could call it like an on-ramp, it's also private. So it's private, permissionless.
That is what I'm most bullish on.
Me too, man. Like, honestly, me too.
Having a way to onboard, my dirty, nasty, dirty girl fiat into my into crypto, and things like Zcash and privacy stables and things like that. Like Bold potentially. Still not too sure about that with it being backed by ETH, but I digress. Just having that on ramp is massive when it comes to self-sovereignty, financial self-sovereignty. So hugely bullish on that, but continue.
Yeah, me too. Me too. And don't talk shit about my Bold. That's my Arrow.
Hey, as long as you talk shit about Arrow, I'm going to talk shit about Bold.
There we go.
But that withdrawal phase introduces a mechanical reality. How does a near smart contract physically authorize a transaction on a completely separate blockchain, like Bitcoin or Ethereum? The solution relies on a cryptographic primitive called additive key derivation. Using this...
Okay, so this is additive key derivation. Interesting.
This mathematical derivation, a single master public key on Near, can deterministically generate an infinite number of unique subkey addresses across external networks.
Wow.
To securely authorize transactions for these derived addresses, Near employs a decentralized multi-party computation, or MPC, signing service. When a signature is requested, a network of 8 independent nodes executes multiple rounds of threshold cryptography. They generate individual signature shares that seamlessly aggregate into a single, valid signature for the external chain. The core security feature of this MPC architecture is that no single node ever holds or even has access to the actual master private key. The combination of additive key derivation and decentralized MPC transforms Near into a universal execution layer capable of natively commanding foreign state. This macro perspective of the architectural system shows the core engine operating in real time. Internally, Nightshade 3.0 and stateless validation provide the massive, low-cost bandwidth required to run high-frequency ledgers without hardware bloat. Externally, chain signatures and the MPC network translate that internal efficiency outward, establishing trustless, universal execution across independent chains. The ability to clear intents flawlessly relies entirely on the underlying Layer 1 architecture's capacity to verify asynchronous internal state without friction. Near Protocol has evolved beyond the role of a high-speed database, systematically engineering the foundational hub required for autonomous Web3 and AI ecosystems.
Yeah, it really has. I mean, just absolutely amazing what they've been able to build, man. I love it. I really, really do. So let's take a look at the rest of this research article here. So, fragmentation problem. So here's the thing, when you're operating on a particular chain, you're kind of siloed, right? It doesn't have to be that way though. Imagine if there was an aggregator where you could, see opportunities on every chain. Let's say that this aggregator aggregates data from every protocol on every chain, and it integrates near intents. So not only can you see every protocol on every chain, but you can also, permissionlessly go from Bitcoin on your layer 1 to, a money market position on a money market on Near, the Near chain, or on the Solana chain, or on Ethereum mainnet, or on SUI if it's actually operating anymore. So that's
if it's back up.
If it's back up, right? So I'm going to keep poking SUI because that's just unacceptable. This is Near allows us to navigate post silo. So this is post silo crypto, post silo DeFi, and the TPS threshold, 1 million TPS. It's achievable because this is off chain. So you're not transacting a million TPS on chain. You're transacting a million TPS in that near.com account on like Google Cloud hardware. So that's how they're able to get this up to a million TPS. Pretty cool. And then the chain signatures. So this is how that one Near account can control layer one assets on any chain. So your Near account can control layer one assets on Bitcoin, Ethereum, XRP, etc., all of them. And it's because of these chain signatures. So multi-chain sovereignty is a big deal. And so imagine you give your agent a Near.com account. Well, now all of a sudden your AI agent can operate on any chain autonomously and natively. That is amazing. And it's private. So confidential intents and selective disclosure, like being able to on-ramp into your Near.com account privately and confidentially, dude, that they basically have solved confidential on-ramping too. And let's see here. So the rolling referendum, this is the important part. So a bold move in tokenomics. Now, this is what I'm most focused on because if we take a look at the chart in Satoshis, this is Near in Satoshis, it's broken out, or at least it's pushing sharply higher. Now, this is not the first time we've seen Near, rally in Satoshi terms. We've seen Near, Near did that at the start of the last bull and ended up giving it all back. So, this could be the start of a rally in Near, but if Bitcoin just, dumps another $15,000 over the next couple of days down to 50K, it's going to be really hard.
On that topic, though, dude, there's a handful of alts that are performing really well against Bitcoin right now. Hell, even that freaking governance token Ondo has decoupled from Bitcoin. If you want to take a look at that, I don't want to get you distracted, but it's actually decoupled from Bitcoin because of all the hype that's going on with it right now, and it's a freaking governance token. There's like there's no value capture. There's no connection to the tokenization that Ondo Finance and that whole company's doing, and it just goes to show you that there still is room for speculation and those speculative pumps in this market.
Well, yeah, I mean, we can see that expressed over here with Bitcoin dominance. So, with Bitcoin dominance rolling over and crashing, down several percentage points over the last couple of days, what that tells me is that there are a lot of altcoins that are rallying as Bitcoin is rolling over.
Yeah.
Or a lot of altcoins that are not, moving to the downside as sharply as Bitcoin is right now.
Yeah.
But I can't be a buyer of those rallies. I'm just
watching. I'm just pointing out, that aspect.
Yeah, for sure. So if we bring it back on over here to the report, the rolling referendum. So it says here on October 30th, 2025, Near implemented its most decisive economic realignment, slashing the annual inflation rate from 5% to 2.4%. Okay, so it says this transition was legally and technically complex. While a community vote saw 92% support from active voters, it failed to meet the 66.67% quorum of total stake due to validator abstention. So validators abstained from voting. I wonder why that was. It said the core team proceeded via a rolling referendum, including the code in the version 2.90 release, but keeping it inactive until an 80% supermajority of validators voluntarily upgraded. Oh, fuck. That's not good. So basically, like, how if this token is still inflating at 5%, the near token, how much money does the near protocol make, and how are tokens burned? So we
Well,
need to dig in specifically to the tokenomics.
you can stake for like 4 to 5% so you can mitigate that inflation in that aspect.
Right, right. So what we need to do is we need to figure out how much of the token supply is locked in validators, and how much is actually being, minted, every day or every week. What is that mint burn mechanism? And what's the float? Like, what's the liquid float? Because price is set at the margin. So if there's a billion, I'm just making this up, but if there's a billion tokens and 900 million of them are locked in validators, and it's inflating at 5%, but the float is only 10% of the total token supply, and there's a lot of people holding that remaining 10% of the float, then what's actually liquid to trade is really, really small.
So
And that's where price gets set.
This is what I was able to find. So as of June 3rd, the circulating supply Near token is approximately 1.3 billion. So the circulating supply 1.3 billion. These are the tokens currently released to the public market and available for active trading. Total supply. This figure represents all tokens currently in existence, including those that are vested or locked. Maximum supply. It says that Near Protocol does not have a hard cap maximum supply like Bitcoin. Its design includes an inflationary model meant to support the network's security budget through a governance upgrade in late 2025. That's what you just went over. Reduce the maximum annual inflation rate from 5% to 2.5%.
Got it. Okay. So we need to dig in specifically to item 6 in the research. So whenever I produce these, deep dive research reports, there's usually like one item in there that we could expand upon further. And in this case, for Near, it's this one, number 6, the tokenomics here and the rolling referendum. We need to figure out, of that 1 point something billion token supply, how much of that is locked in validators, what's the liquid float, and how many tokens are being minted every day, every week, every month. Are there unlocks for the team? We need to dig into this, because it's one thing to see, Bitcoin dominance moving lower and alts like Near pumping, but even though their tech is amazing and I love it, even though that is true, if their tokenomics right now are not good, then what that tells me is all I got to do is wait a little while, and maybe later this year I'll be able to buy it for half the price of $2.83. It was at $3 today. Maybe if I wait a couple of months, I might be able to get it at $1.50. Or
all right. Total supply is 1.3 billion. Stake supply is 46% at just shy of 600 million. And the liquid float is 702 million.
Awesome. So, wait, one more time, Mike. Can you tell me that one more time? Because I got distracted by One Armed Bandit talking about the Solana Seeker phone, and I'm needing to really start to use my Seeker. I've got one sitting in my cabinet right there.
So the total circulating supply is 1.3 billion. The staked supply is just shy of half of that at 46%, or 600 million. Liquid float is 702 million.
Got it. Okay. So
around like 55% or something like that.
That's a lot. That's a lot. Especially when you compare it to something like Hyperliquid.
Yeah.
So okay. So half of the float is just out there. That's tough. That's tough. And it's inflationary.
Well, it looks like Keith is saying there's also liquid staking Near as well.
So there is.
So that could actually offset the inflation because you can stake for around 4 to 5%. And if the inflation is only 2.5%, then that mitigates that plus some. And potentially, if it's liquid stake, you could actually lever up. And correct me if I'm wrong, David. This is my understanding, is you could use that staked near to in a DeFi play to lever up and earn even more.
Yeah, exactly. So that's what I'm thinking about here. So I'm over here at DeFi Llama taking a look at the near chain, and there really isn't much that you can do in DeFi on the near chain itself. That hopefully will change soon. But if we take a look at linear, so LI near protocol.
Well, maybe not natively, but with with those intents. I mean, does that allow for it to be on other protocols and other chains?
So, no. But if you could find out, Mike, how much near is burned during a near intense swap, or how much near does that near intense cross-chain permissionless bridge actually burn? I would be curious to find that out. But here's the liquid staking protocol on near. It's called linear. So LI near protocol. And the protocol URL is linearprotocol.org. So this will allow you to stake your near on the near layer 1 chain for LI near. And what you end up getting is like more voting power. So, I don't think that there's like a real super legit value accrual mechanism here. But
it looks like there's a burn and rebate model. So it says on the base near blockchain, transaction fees or gas are subject to a burn and rebate model that is backed into the core protocol. 70% burn, all transaction fees minus the developer rebate are burned and permanently removed from total supply. 30% developer rebate. To incentivize the creation of useful decentralized applications, 30% of gas fees generated by a contract call are rebated to the developer of that contract.
Okay, so I've got a question for One Arm Bandit in the chat. He's saying there ain't no bank in the world that you can hold $1,200 and be earning $1.30 every other day just for keeping your funds locked up for savings and security. Which protocol are you referring to there? I'm really curious to take a look at that. But yeah, so when it comes to linear, this thing, if I click on stake now, right? And I want to stake my near. So I got to connect my wallet here and then take that near, go ahead and stake it. I wonder if there's a lockup. Like, am I locked here? I don't think so, but I'm not sure. I would just want to make sure that I'm not locked up, because if I click unstake, is there a cooldown period?
I do not like that. Whenever there's even a 24, 48 hour, I mean, I can play with that a little bit, but some of them are like weeks. Some of them are like 3 weeks, a month. And it's just like, no.
This one's 2 days. So you can instantly unstake, but you're going to pay 5 basis points in a fee. Or you can unstake
so a simple near transfer is 0.00001 to 0.005 near. A standard token swap is 0.001 to 0.005, and complex intent or bridge operation is 0.005 to 0.02.
Okay. So it sounds like it's just not really. So what is that in dollars? Like, I'm trying to figure this out. So if there's every single day a certain number of transactions that occur on, so One Arm Bandit was talking about Seeker. You get 18% APY and you receive your interest in Seeker tokens every other day. Dude, I've got to fucking set this thing up. I swear to God. Like, I've got it right here. Like, it's just been sitting, and so here's my little seeker. So I gotta get that thing set up. I'm gonna set that up today and put that on my list. But I'm trying to just wrap my head around Near's tokenomics here. So if every time someone executes a transaction on the Near chain or using Near intents, a certain small amount is burned, well, okay, great, but how much is being minted every day? And if 50% of the supply is liquid and can be sold, like those tokenomics, that's not good. So, but it could be improved, and maybe this is definitely a token worth speculating on, I think. So I'm just taking a note. Setup.
Okay, so
seeker.
A simple Near transfer in the USD equivalent at current token price is 0.0003 cents to 0.0014 cents. The standard token swap is 0.0029 cents to 0.0145 cents, and a complex intent operation or bridge, is basically 1.5 cents to almost 6 cents.
Got it. Okay. So then I wonder how much is produced every day. Like how much Near is minted every day. That's what I'm curious about next, because and how much is burned every day, because if that burn mint,
what's the burn mint ratio?
Yeah, basically, that's what I'm thinking about. But what is that burn mint ratio? And hopefully it's not horrible. And maybe burn mint ratio is a metric that we can start to produce on our own when we produce these pieces of deep dive research. And then we can kind of use that to build out a table of other important tokenomics metrics. And then that way we can, compare, protocols and their tokenomics against each other on an apples to apples basis. That would be pretty cool to do. Definitely want to do that.
So I don't know if this really answers it, but it says as of right now, the inflation rate is 2.5%. The burn consumption is a highly variable 70%. Of each transaction, and then it says why it's difficult to really pin down what the burn mint ratio is, because the minting is constant, but the burning is demand driven. The ratio changes daily. So low network activity days, the protocol is net inflationary. The 2% emission to validators outweighs the fees burned. High network activity days, as network utilization spikes during high DeFi volume or major dApp launches, the amount of Near burn can significantly offset the daily emission, pushing the protocol closer to net neutrality or even deflationary for that 24-hour period. So it's just like it said, it's really hard to put your finger on it, because today it could be deflationary, tomorrow it could be the total opposite.
Okay, so that's not horrible. And
it just really depends on adoption and usage. I mean, it's like Canton, to be fair. It's like Canton. The way that its burn mint ratio works, and reaching equilibrium, and the difference between it being deflationary or inflationary is network adoption and network usage. It looks like Near is adopting a similar model.
Yeah, and that's it's not bad either.
No.
So yeah, no, I think
it's just you need to the responsibility is on you to keep your finger on the pulse of the project,
right?
And real adoption and real usage. Not there's rumors of they're looking into using Near.
Or my favorite, they partnered with
yes.
Insert big bank name here.
Exactly. It needs to be deep integration, building, launching of real dApps and real network usage. They need to bring real volume to the network.
Yeah, no, agreed 100%. So back on over here on the website at thenode.pro, Mike. So let's see here. We've taken a look at Near, and I would encourage everyone to hop on over to near.com and try using the cross-chain bridge yourself. It's amazing. It's absolutely amazing. Now, let me give you a couple of pieces of advice here. Don't start too small. So, $20 transactions, that's the smallest you can go. Anything less than like $20, if you send less than $20 in stables to your near.com account, it may not land because you got to incentivize, validators to, complete your transaction. So if you send $5 in USDC, you might not get it. So, just keep that in mind, okay? And that's in their documents right now. So so just keep that in mind. You don't want to start too small, but send $25 to Near. And once you get your $25, then, and so this is beautiful, Mike. What you did with the images here, it looks great, dude.
Actually, if you refresh, I already did the ICP one too. Or no, did I? Hold on, let me look.
I just posted it a second ago.
Oh, okay. I'll do that right now.
Yeah, so I mean, check this out though. This is our Intel library. So if you want to learn about any of these protocols here, and just beautifully formatted content, if you take a look at, what we just ran through with Near, let me just go ahead and sign back in here real quick so that I can get access. Here we go. So if you want to run through, this is the beautifully formatted written content here, the videos, the slide decks, the source material for every single piece of Intel here. Now, let me just check to see if, some of the original ones that we did, if the formatting got fixed on the written content or not. It looks like it didn't on this one. So what I got to do today is I got to go back through, or Mike, I don't know, maybe you want to do this, just go back through every single piece of Intel, because we only have a handful so far. It's the early ones where I hadn't finished the written report formatting logic yet. So if you just go through the initial ones and click that AI format button in the back end in the Intel bundler, it'll fix the formatting of the written reports. So let's move on over here to ICP. Now, why are we talking about ICP? Well, because it's just kind of interesting that as Bitcoin, is having a rough go of it right now, that ICP is actually moving to the upside. I mean, plus 2.8% today. That's kind of interesting in my opinion. So I want to learn a little bit more about the ICP protocol here. Okay, so let's go ahead and take a look at this piece of video content. I'm not going to lie, I know next to nothing about this protocol other than, if I know the chart. So if I zoom out on a weekly.
I know last, the end of last.
This is the chart.
Cycle. And
right.
I know that, yeah, no, the chart is terrible. I know the narrative for it was that it was the Web3, the new internet for Web3. It was, the narrative for it before, but go ahead.
Yeah. So let's see what it's actually about now today in 2026.
Modern internet infrastructure relies on massive, centralized data centers. Operating complex applications requires rows of industrial cooling units and a massive physical footprint. Historically, blockchain architecture hasn't been able to replicate this scale. The Ethereum virtual machine imposes strict limits on state bloat, capping how much data a smart contract can hold, and lacks native support for the floating point math required for complex computation. This split-screen comparison maps the EVM architecture against the Internet Computer Protocol's 2026 framework. By utilizing WebAssembly's 64-bit execution, the protocol expands smart contract state capacity up to 500 gigabytes. We are going to deconstruct how ICP's specific technical layers, its memory boundaries, AI processing nodes, and cross-chain cryptography function as the mathematical drivers behind the Mission 70 tokenomic deflation event. An inflationary network cannot achieve structural, demand-driven token deflation until its base layer is capable of processing continuous, heavy computational loads without failing. The Internet computer operates on a base unit of computation called a canister. It represents a structural departure from traditional smart contracts by integrating WebAssembly execution bytecode directly with persistent state memory. We can see this structure in this 3D representation of a single canister block. The top zone represents the volatile heap memory, which the WASM-64 upgrade expanded to a 6 GB active limit. To prevent memory-heavy canisters from crashing individual nodes under concurrent load, the node execution layer enforces a hard 10 gigabyte RAM cap, represented by this outer boundary. Writing data from the active heap into long-term storage typically requires resource-intensive serialization. A feature called enhanced orthogonal persistence bypasses this filter entirely. Notice the read-write conduit forming a direct bridge into the lower zone. This direct integration safely unlocks the bottom section, granting every individual canister access to the full 500 gigabyte stable memory capacity. If an update requires more instructions, deterministic time slicing automatically pauses the computation at a designated boundary and resumes it in the next consensus round. By pairing direct stable memory access with time-sliced computation, the protocol guarantees that massive, data-heavy decentralized applications run entirely on-chain without timing out. This execution layer operates on a reverse gas model. End users interact with these on-chain applications smoothly without ever paying gas fees or holding network tokens. Instead, the developers pay for the computation, memory, and bandwidth. They must pre-fund their own canisters with an asset called cycles. This flowchart maps the dual token system. A developer takes volatile ICP tokens and feeds them into a unidirectional pipeline, permanently destroying the token to output cycles that fuel the canister. To shield development budgets from cryptocurrency market volatility, the value of those output cycles is hard-pegged to a metric called the XDR. The XDR, or special drawing right, is a real macroeconomic currency basket created and managed by the International Monetary Fund.
That's retarded. The fuck is that? Like, that's so stupid.
Tell us how you really feel.
The protocol structurally locks the conversion rate. Exactly 1 trillion cycles equals 1 XDR. This allows developers to project operational costs with absolute certainty. By shifting the cost of capital
No. That does not allow developers to project costs with absolute certainty because the IMF lies to you.
Retail user to the developer treasury, any increase in application usage directly accelerates the permanent destruction of the native token. To maximize that destruction rate, the network architecture intentionally hosts highly complex, cycle-draining workloads. This schematic maps a gyrotron subnet. Under the gyrotron milestone, developers deploy...
Dude, they called it the gyrotron? Dude, like,
The
gyrotron?
that actually reminds me of I don't know if you remember it. I might be dating myself, but like there were the traveling carnivals and stuff back in the day in the state fair. There was a ride called the Gravitron that it looked like a UFO that would spin around, and there was these padded beds on the walls, and as it spun, the centrifugal force would like pin you against the wall. But that's what immediately what popped in my head when you said that.
I remember those things at carnivals, but like the gyrotron, what a horrible name.
AI model weights inside a WASM-64 canister, which then sends an inference query out to a GPU hardware node to process. Because standard floating point operations yield different results on different processing chips, which would break network consensus, Definity optimized WebAssembly to force deterministic floating point math across all GPU nodes. Once validated, the model generates an output. For every inference query executed, the developer's canister is charged a specific fee in cycles. These AI models are not isolated. They interact securely with external blockchains through an integration framework called chain fusion. This architecture map traces the chain fusion process. By utilizing advanced threshold cryptography like ECDSA, Schnorr, and ED25519, the canister natively generates and holds keys for external networks like Bitcoin and Solana. Instead of relying on centralized wrapping bridges, the canister executes secure HTTPS outcalls directly to multiple independent JSON RPC providers, merging the responses via subnet consensus to output a native transaction signature.
Oh my God. Wow. Mike, that's a big deal, dude.
Sorry.
So we were talking about the gyrotron.
Yeah.
No, I'm just kidding. This is something completely different. So if you're building a smart contract on ICP, then anyone on any chain can natively interact with your smart contract. So that completely abstracts away the the chain silos.
Okay.
You see?
Okay.
That's pretty cool. That's pretty cool.
Autonomous AI agents evaluate market data natively and instantly execute cross-chain trades via chain fusion, establishing a continuous drain on the cycle supply.
Can you pause it real quick? I just want to make a point. Now, whenever we're doing these deep dives, I want everyone to understand that you need to have two different mindsets. This is really cool and really sexy. Same thing with near. With the intents and the bridgeless swapping, that kind of thing. But you need to remove that and look at it separately. A separate comparison with the tokenomics. There's the project itself and what it's doing and what it's capable of, and its technology and its partnerships and the network usage and adoption, all of that, the fundamentals. Then there is the token and the tokenomics, and if the token, the role the token has in all of that. So we can, we're going through this right now, and looking at ICP and saying, yeah, this is cool, this is sexy, whatever. We haven't gotten to the tokenomics yet. So just keep that in mind at all times when we do this.
Right. Yeah. So all that's interesting about this so far is that it looks like you can build smart contracts on ICP that anyone on any chain can use. That's pretty cool, man.
No, it's very cool. No, it's very cool.
Is the mechanical foundation
is what makes DeFi possible. So
yeah, and I mean, it's a hell of a lot better to be able to interact with a smart contract from any chain than it is to be stuck siloed on one particular chain.
Supporting the Mission 70 tokenomics update. This data table tracks the Mission 70 supply-side targets. The primary objective is to slash the
Dude, I want to know who built this ICP protocol, because we got stuff like Mission 70 and the Gyrotron, like who's behind this, man? This is actually, it's not bad. It's like, I'm kind of interested in this now.
Gross annual ICP minting rate from 9.72. The maximum dissolve delay is hard capped at 2 years, and the yield curve is adjusted to mathematically penalize short-term staking lockups. We can isolate the equilibrium target using this balancing graphic. Even with the Mission 70 reductions in place, the network still mints approximately 28.45 million new ICP tokens annually. To offset this issuance, the average network cycle burn must scale from its historical baseline to exactly 0.77 XDR per second. Even hitting this target leaves a supply-side deficit of 20.36 million ICP that must be destroyed to reach net deflation. Token deflation on the internet computer is not determined by market sentiment. It is a strict mathematical threshold that triggers only when transaction and compute workloads sustain that 0.77 XDR per second burn rate.
We're seeing this repeatedly in, I think a lot of these different protocols and these different chains are starting to cue in to what we've been talking about. These models, being net deflationary or inflationary, this, kind of burn mint mechanism being installed. And a lot of these, tokens that historically, a lot of the older tokens that are either really cheap gas tokens or just only governance. I think that these new projects and the ones that are evolving are realizing that to incentivize people to buy the token, to invest in these tokens, there needs to be something in place, to where there's some of that value capture. So anyway.
I agree, Mike. And we see the same type of patterns repeat over and over again, because look, these are at the end of the day just incentivization mechanisms. They're like economic mechanisms. So, look, you can cook up any type of economic mechanism you want to. That's why the people who write these contracts sometimes are referred to as, master chef or the cook, because you're creating some type of economic device.
Or as Keith says, Steely Dan.
Steely Dan.
That's why they're coming up with Gyrotron and all that stuff.
I know. Mission 70 on the Gyrotron, man.
Right.
Closing that 20 million token deficit requires an enterprise-scale catalyst, Cloud Engines. This governance router flow maps network partitioning. Alongside standard public networks, enterprises deploy isolated cloud engines for their workloads. Nodes on these subnets are paid by clients, and the protocol automatically diverts 20% of this revenue to permanently burn ICP. This infrastructure is already active, handling institutional integrations for digital credentialing systems and global financial messaging networks like SWIFT. However, relying heavily on enterprise architecture introduces a critical vulnerability for the ecosystem, a severe divergence in liquidity. Institutional reports track $1.14 billion secured in private cloud and real-world asset integrations on the network, but public data aggregators report a mere $53 million circulating in core retail decentralized applications. If Definity can leverage its bridgeless chain fusion architecture to inject that locked institutional capital into native liquid staking and order books, the mathematical framework of Mission 70 ensures ICP will operate as the primary deflationary sovereign cloud of Web3.
Yeah, sure. Sure.
I think that's highly speculative. I think that's highly speculative.
Whatever you say there, Gemini. Okay. Yeah. So let's see here. Critical takeaways. Mission 70 tokenomics. So this is a strategic initiative to reduce the gross ICP inflation by 70% by the end of 2026. It's targeting a net inflation rate of 2.92%. And this involves slashing voting and node provider rewards while capping dissolve delays at 2 years. They got the on-chain AI, that's that Gyrotron. It says the completion of the Gyrotron milestone enables canisters to utilize GPU-enabled nodes for deterministic AI inference, allowing developers to monetize AI models directly through cycle consumption. And then you got cloud engines and scaling. So the Fission protocol has introduced horizontal partitioning and cloud engines. They are a private enterprise-grade subnet where 20% of operational revenue is burned to destroy ICP. And then you got chain fusion. This is what I was actually really interested in, this chain fusion part down here. That's actually really cool. So native cryptographic integration now supports Bitcoin, Ethereum, and Solana. So it allows these ICP canisters, which are like where a developer builds his smart contracts. It allows these canisters to control assets across these chains without an external bridge. Same type of idea as, when we were taking a look at Near a second ago, and great looking thumbnail, by the way. Same type of idea here when we're taking a look at Near with these chain signatures. So Near goes about it by using chain signatures, and ICP goes about it by using, what the hell did they call it in ICP? ICP uses, if I go to critical takeaways, chain fusion. So you got cross-chain signatures, and then you got chain fusion. So this is actually, that is super cool. So yeah, but the tokenomics here are dog shit. And so that just, probably anyway, I mean, if it's super inflationary, and no one's really using it, if we hop on over here to DeFi Llama, let's just take a look. ICP, there it is. It's a chain. So let's see what's going on. And what wallet do you use for ICP? So you go, okay, there's something here. There's about as much DeFi going on here as there is on Near.
That's all relative. It's like,
well, I mean, it says 12 million. Near is 200 million, I think. But there's actual something. So let's, and we got 5 minutes left, Mike. So you probably want to run through the socials. But what is the best ICP wallet browser extension? What is it? I want to try using ICP. I've never operated natively on ICP, and I don't think that you can, send ICP to Near and then swap it for Bitcoin. I didn't see ICP being one of the integrated chains on Near. So, dude, you're gonna love this, Mike. The #1 wallet browser extension for ICP is called the Plug wallet. And then you got,
there was some X or Twitter beef between that ICP started with the Near crew. It was gay and not even Pride Month when it happened.
Well, checks out. I mean, they named their thing the Gyrotron.
Right? It sounds like a sex toy or something.
It does. So, like, if I'm on Origin, like, what the hell is this? Is an ICP native protocol? It says Origin is. I mean, this is, I don't know what the fuck this is. It says the protocol information. The Origin protocol has been made possible thanks to the, like, dude, it doesn't even on DeFi Llama, it doesn't tell you what it is. And then you got something called Water Neuron. This is, I guess, Water Neuron. And the first thing that it's showing me is I got to click all these pop-ups. This is Water Neuron on Internet Computer. This is a liquid staking protocol where you can stake ICP and you get N ICP. I mean, this is a horrible UI, man. This is really bad.
Yeah.
Okay, and then back on over here to DeFi Llama.
And where can you use that liquid staked ICP? You know, where there's any amount of liquidity.
For what? You know, there's no money market, it looks like. Let me just go back. Is there a money market? Lending. Liquidium. Liquidium.
Liquidium.
Oh my God. Liquidium.
The TVL is going up. I mean,
it was. I mean, look, here's the TVL. You know, active loans and TVL going up, you know, starting from 0. So that's great. So over here, Liquidium, native Bitcoin loans. Huh.
Interesting.
See? This is cool as fuck right here. So how does this work? Because if you bring it back to the research, right? Back to the research, chain fusion. Remember, chain fusion. Native cryptographic integration supports Bitcoin, Ethereum, and Solana. It allows those ICP smart contracts, those canisters, to control assets across those chains without an external bridge. So that is super duper cool. And if we take a look here, man, like native Bitcoin loans, okay, sweet. Open the app. Let's check it out. How do I get some of this more Bitcoin that you speak of?
MOAR.
MOAR Bitcoin. I need the more Bitcoin. So if I like, okay, so how do I borrow? Okay, here's my collateral. Let's say that I come in with 1 Bitcoin and I want to borrow, I want to borrow at a 62% LTV. So, okay, so how does this work? 1 Bitcoin and I want to borrow LTV. So if I want to borrow 30,000, oh wow, you can't borrow shit. Okay, no. There we go. I just had to move the LTV up. That's all. I get it now. I see how this works. Okay, so if I want to borrow at a 40% LTV, if I want to borrow $30,000 against Bitcoin at a 40% LTV, I got to put up 1.12 BTC. So how do I actually execute this natively? Let's say that I go let's say that I want to borrow $1,000 and I want to borrow, against Bitcoin at, I just want to try this. So $1,000 and I want to borrow at a 30% LTV to keep it safe, in case Bitcoin has another dumpy dump. And so I got to put up $3,300 of BTC. Okay, great. I want to try this. So let's see, what are the fees for this? So the borrowing, dude, you pay nothing. 0.94%.
They're probably wanting liquidity. I mean, they're incentivizing, people.
And your Bitcoin liquidation price is down at 26,000. So, I think that's probably pretty safe.
Yeah.
And then, you got a small network fee on the supply side, a 30 cents borrow fee on the borrow side. You receive, almost 1,000 USDC, so no real slippage. And then, dude, this is great.
Scotty's like, David, did you just hit a gold mine with this?
I mean, this is super cool, man. This is native on ICP, but it's native on Bitcoin layer 1. But then where do you get the USDC? So like, if
we need to do a deep dive on this to look at the the mechanics that run it in the background.
Well, so if I click borrow, okay, so I just clicked borrow and it's bringing me over to here. So what the hell just happened? So, okay, so let me try that again. I want to borrow 1,000 USDC against BTC at a 30% LTV. I click continue. Okay, so it's kind of a weird user interface right here. Okay, so that's my refund address. Oh, so you get it on an EVM chain. So so what exactly is happening with the Bitcoin? Like, is it just being frozen for a period of time until you repay the? I've got to try this out, dude. Because if this is what I think it is, then this is like native permissionless Bitcoin borrowing. So I've got a lighter around here somewhere, a Zippo, with one of the really big Bitcoin borrowing centralized protocols. I've met a bunch of in St. Petersburg where I live. I've met a bunch of the guys who built that. They're Bitcoin engineers, and they're smart as hell. But it's a centralized company. Okay, I don't remember the name of it, but if this actually works on this liquidium using an ICP canister, then this is amazing because there's nothing that you can't do this anywhere else. Like if you do this on Ethereum, like using Babylon or Solve protocol, it's, you've got like risks that I don't think you have with this.
So, like I said, what was this called? Liquidium?
Liquidium. Yeah.
All right. So let's what do we got? We'll do convex finance and Liquidium tomorrow for the deep dives.
Liquidity on Liquidium.
All right. So we're out of time. So just really quick, I do want to just blaze through the socials, just so people know where to find us. And shout out to the arena. We got about 30 people over there on that social platform watching us currently. So shout out to the arena for showing up and supporting the channel. But if you could, it helps us grow quite a bit. Love it or hate it. YouTube is the 800-pound gorilla, and is a big part of us growing the channel and expanding our reach to help people learn about crypto, DeFi, and TradFi markets. So you can find us at the Node Network, all one word. Over on X, you can find us at the Node_network. If you want to follow us there, that's where I do a lot of posts. I respond to a lot of people and try to help educate people on crypto and DeFi. Try to snap them out of a lot of the echo chambers and things like that people get sucked into, believing that every project that is talked about on social media is gonna 1000x. And then last but not least is our website, thenode.pro. And this is where you can find all of our offerings. So, all of our entry level stuff is no cost, no gimmicks, no catches. Just if you want to learn about DeFi, crypto, and how the traditional banking system works, we have DeFi University. That you can click this button here and you can jump right in. It is very well structured in modules with checks on learning, quizzes, things like that. So feel free to check that out. Again, no cost. Our Intel library. This is huge. This is what where we're posting all of these deep dives. So we just got done with ICP. We got Near, Hyperliquid. I just posted Venice AI before the show. I'll be posting another one here right after the show. What is the one that I just did? Injective. And then I'll be doing probably Euler after that. And then we got Aster, Liquidity, Stellar, Ondo, Tron, Canton. We did a one on all the different stable coins, Athena, Avantis, Plasma, just all of the deep dives that we do here on the Node main show and on the blockchain report. We're going to post here. So great content. And again, We do not charge for this. I cannot stress that enough. We genuinely want to educate you. Our newsletter, you can try that out, with no obligation if you want. But that is $20 a month if you want to be able to get that on a daily basis. And the great thing about it is you pick the assets. We don't pick them. You pick whatever is in your, whatever's in your portfolio or whatever you're thinking of adding to your portfolio, and it's going to give you a fully comprehensive, look at the pricing, what's moving the price, ETF flows. It's going to give you, how the liquidity is moving, in or out. It's going to give you the news as it pertains to your projects that you select in not just crypto, but also in commodities and stocks. So it's going to give you the news, whatever's trending on socials, everything that you could want to know. And it does it in a matter of seconds, like 10 to 15 seconds. What would take you an hour, hour and a half to find it? And that's if you know exactly where to go to find it. So this is a great tool to save you time in the morning while you're drinking your morning coffee or your morning tea. Community, again, no cost. Our Discord, we don't charge for it. Go in there, join the community, find like-minded individuals, great group of people in there. We're always in there chatting, posting alpha, posting information that David finds, that I find. Scotty D is in there, Ellie's in there. We're all in there posting information that we find. It's just a collaborative effort. And there is a premium channel in there if you want to join our Monday, Wednesday, and Friday advanced calls with the rest of the community of successful traders and investors. That is where David will do a lesson, and it's an open forum after that, to where everyone shares successful DeFi strategies that they are doing currently, or maybe something they did that turned out horribly, or that that didn't work out for them. It is a great place to network and to share ideas and help other people avoid mistakes. Great for mentorship. If you're looking for a mentor or you want to be a mentor, it is a great place for that. And then finally, last but not least, we have the store. So if you're want to help support the channel, not required, but we greatly appreciate it. If you want to buy a shirt, a hat, a hoodie, a tumbler, whatever, this is where you can do it. We greatly appreciate it. We greatly appreciate the support. And then of course, there's a couple of things. Our schedule. So if you want to go to the schedule, you can see, on the different days, all of our multiple live shows that if you want to catch. So like today, we got this show, the Blockchain Report is going right now. We have the daily market wrap up that David is doing later. We have the live call that I was just talking about with our advanced group. And then we probably won't be, maybe we'll do it tonight. Maybe I'll stream tonight and do that tank game or something. But just again, you can see our schedule there. The live coaching or the coaching is at no cost. You can come in here and do an exploratory call with David. But this is what he does on Tuesdays and Thursdays with Ellie on the market wrap call. He is putting her through his coaching course live on the show. So if you want to get an idea of what that's all about and what's included in that, that will give you a very good idea. But that will kind of give you an idea of the value. So Ellie went from a very rudimentary understanding of DeFi and things like that. So he tailors it for the individual. It's a one-on-one coaching. So it's a very bespoke experience. And that's it. So we appreciate you showing up and supporting the channel, watching. If you could, please, the most powerful thing you can do to help us grow the channel and help other people find this no cost educational content and resources that we offer is please simply go down to the bottom, hit the thumbs up, like, subscribe, share, whatever you're comfortable with. We greatly appreciate it. And until next time, Veteran Crypto out.
Peace.